Hi, I'm Elise Fay with the Seabach team and eXp Realty, and today I have the pleasure of speaking with Eric Murrieta with VIP Mortgage. We have been partners together for over 10 years now.
Yeah,
right?
It's been almost 15. That's
Wow.
a long time.
15.
Yeah.
Dang. A long time. And we do a lot of business together, and he's also a very dear friend. So I wanted to get Eric's perspective today on the market.
Yeah.
Crash versus correction.
Yeah, for sure. I mean, you said that one of the things that you've been researching or people are researching on Google is the market going to crash?
Yes,
is that correct?
yes, one of the most searched phrases right
Yeah,
now.
absolutely. Well, I think first let's break down crash. Like when we see crash, we all put 2008, right, in the front view mirror. Like we're like, hey, 2008 happened, that's going to happen again. We're going to lose 40 to 50% of the value. The whole world's going to go crazy and all that stuff. Well, the one thing that we can tell is that it cannot, a crash, and I don't want to say things specifically, but I can almost say a crash can't happen. And the reason why it can't is because the lending regulations changed so much from there that any person that bought or sold a house in the last 10 years had the right to afford it. Obviously, people are going to lose jobs at times. Bad things are going to happen. People get sick or they die. And so there is still foreclosures and things that happen to really good people, bad things that happen to good people. But at the end of the day, the overall market, you'd have to have something catastrophic happen for another crash to occur. And we just don't see the indicators being there for a crash. So what we're in is a correction. Right? And we've seen corrections in all sorts of things. There's corrections in
the stock market.
Stock market, finance, all sorts of things go through corrections, right? Our bodies go through corrections when we eat too much and then we have to correct it, right? So there's all sorts of things in the correction. But I think the high level thing for us in a correction is I think we're in a correction right now. And I think you would agree that that's what we're seeing. And why do you think we're seeing that correction on the real estate side? What are you seeing?
We're seeing a correction in pricing for twofold. So sellers had the luxury of just their prices just kept going up on their homes, right? We had a strong demand and interest rates were low. So buyers could afford a lot more.
Right.
Well, now when we're in this correction, interest rates have gone up and now buyers can't afford as much.
Correct.
So they're dictating to the sellers, well, listen, we love your house, but this is all that we can afford.
Yep.
And sellers have to come back down to something that's a little more realistic.
Right.
So it's the meeting of the minds, and that's bringing the prices down just a little bit. I mean, it's definitely not going to crash. We have had solid since 2011 appreciation.
Yes.
So even the typical 5 to 8%, I mean, granted the COVID years brought those numbers a lot higher, but if you look at a chart going all the way back from 2001, you will see that the appreciation is still huge. And it would be tough for somebody, unless something catastrophic happened, that they would have to foreclose on their home.
So what should people do in a correction? As a buyer, like we talk about buyers, so we know it's correcting. So what should someone that's like, I want to own a home, because we know that home ownership is like 85% of net worth is built through people owning their home. That's where most people's net worth is. So if you don't own a home, you're kind of behind a little bit, right? Some of the wealthiest people in the world own real estate and land. And so if they're trying to get in the market, but they're like, I need it to crash or I need the affordability, but we know that we're in a correction, not a crash. What would you kind of tell that buyer, or what would you say to them?
I mean, I would tell the buyer, especially if they're renting right now, that you would rather build your own wealth and pay your own mortgage as opposed to paying somebody else's mortgage. So I think that there's no such thing as market timing. And I know in the back of everyone's head, they're kind of waiting and let me see, it's going to go down. And everyone has their own predictions, but you lose so much just waiting. I mean, the cost of waiting, as we talked about earlier, is huge. So you need to get into the market now. And if you're going to hold and live in your home for 5 to 10 years, you're going to be great.
Right, because I was one of those guys. I bought a house in 2007, and for whatever reason, I decided I'm just going to hold on to this thing and ride it out, right? I didn't foreclose, I didn't let it go, but I rented it out, and I was mad at myself because I held it for 10 years and I made my money back, but you know what would have happened? What if I would have waited 3 or 4 more years? I probably would have made a killing on it, right? Especially what it was. And so what that reminds us is that even in a correction, we can't time the market.
No.
Yeah, I bought at the wrong time, but anything that you hold ultimately is going to appreciate. And we know that average historical appreciation is something over 5%, right?
Yes.
So even if you bought a house today, lost 10%, in the year, right? Let's just
Right.
say at some point it's coming back. So you might be 2 or 3 years, but most people don't buy a home to sell it next year either. And I think that's what buyers sometimes get wrapped up about is they want the best deal. Everybody wants a great
Everybody
deal.
wants a
And
deal.
there's nothing wrong with best deals, but there is something wrong with saying I'm going to try to time this market. And in a correction, you can't ever time it. Find it interesting too on the stock market. I think I was listening to June 17th, 2022 is kind of when the bottom sort of happened,
Wow,
and we've
that's
been climbing
interesting.
up,
Mhm.
but we don't know if it's going to have another bottom.
Right.
But if you were trying to time it, you would have missed this 24, 25, 20% run up, 15 to 20%
Yes.
run up that we've seen if you had pulled everything out when it was really bad. So
Right.
it's interesting. I just don't think we can time it. So
No,
I think it's
and
correction.
yeah, and I still think it's a great time to be a buyer. I think there's some amazing opportunities out there.
Absolutely. Do you think the correction is going to last 6 months, 12 months? How long do you think it's going to be before buyers and sellers maybe become a little bit closer in their expectations for the
Okay.
sale? Because that's the difference right now is I think sellers are expecting more
Yes.
and buyers are needing less. And so they're trying to meet. So how long do you think
I
it'll
mean,
be before we
I
actually
think
get there?
I think 6 to 9 months.
6 to 9 months?
Yeah, I
Okay.
do think that that's going to be.
But if you were a buyer right now, would you wait?
No, in
Okay.
fact, typically, I would say November up till February is in any of our markets is the slower time.
Okay.
So when sellers are on the market during the holiday season, they really motivated,
Yeah.
right? Or if you put your house on the market in October, you're motivated, you want to sell. So if you're a buyer, that's an amazing opportunity.
I love it. And we're seeing rates start to level off. We're
Yeah.
seeing inflation meet expectations. And so I agree. I think if you're a buyer and you're not yet qualified or you're thinking about doing something in the next 6 to 9 months, you got to start the plan now
Right.
because you're going to find a really good opportunity, I believe, in the next 6 to 9 months. And then I think we're going to level off. And once we level off, you're going to go the other direction. And now
Yes.
you've missed it. And if you miss it, you miss the boat. And on our side too, we know that rates go up and down. So even if clients can afford it today, there is going to be an opportunity down the line for rates to change and adjust because things are always moving. And so you'll get an opportunity to maybe reduce that
Yes,
overall
but not
payment.
forever.
But we're never going to qualify you for something you can't afford. So we just got to bring these expectations together.
Yes.
So I think no crash, right? Just
Yes,
a correction.
definitely no crash. A correction, we can ride it out, and still a great market.
Hey, I am finding more buyers getting better opportunities today than they've had in the last 2.5 years. So if you think I'm going to wait, don't wait for that market to turn and sellers to be like, nope, we're good. Either they pull their home completely off the market
Right.
or the rates either do keep going up or like you just miss it because now there's a better supply and demand and they're just like, yeah, we're not interested. I just think you got to, if it's me, I'm pulling the trigger sooner rather than
Yeah,
later. So
absolutely.
that's cool. Well, thanks for having me.
Yes, thank you. Great chatting with you.
Absolutely. And if you guys need anything on the home side, call Elise. She's
And on the
amazing.
lending side, Eric's the man.
All right. We'll see you guys real soon, right?
Yep.
All right.
Bye.